Good morning, investors. You are now on KleverStock with me, Anujarya, serving you the latest morning bell updates. Kicking it off with the opening bell updates on our local market. Bursa Malaysia opened slightly higher on Tuesday as global markets rebounded from fears of an escalating US-China trade war, following signs of a softer stance from Washington. Investors took comfort after U.S. President Donald Trump walked back his earlier remarks on imposing a 100% tariff on Chinese goods in response to Beijing's rare earth export curbs. The move spurred a relief rally on Wall Street, where the S&P 500 rose 1.56% and the Nasdaq surged 2.21%, though both indices remained below their highs from the previous week as the two economic superpowers continue to seek common ground on trade. At 9 a.m., the FBM KLCI edged up 2.14 points to 1,617.29. Analysts said the local market is likely to remain in a consolidation phase amid a lack of fresh catalyst. Rakuten Trade said the overall sentiment remains cautious, reflecting broader weakness in regional markets. It said, as tensions between Xi Jinping and Trump persist, we believe traders will stay on the sidelines for now. Hence, we anticipate the index to trend within the 1,610 to 1,620 range today. It added that nonetheless, we envisage the bargain hunters to emerge if the index dips close to the 1,600 mark. Now, among heavyweights, Petronas Chemicals climbed 9 cents to 4 ringgit and 33 cents, while Public Bank rose 12 cents to 11 ringgit and 12 cents. QL Resources gained 8 cents to 4 ringgit and 45 cents. YTL Power advanced 3 cents to 4 ringgit and 12 cents, and YTL Corp added 3 cents to 2 ringgit and 68 cents. Genting Berhad rose 12 cents to 2 ringgit and 98 cents after announcing a takeover offer to privatize Genting Malaysia Berhad, who jumped 19 cents to 2 ringgit and 33 cents, just 2 cents below the offer of 2 ringgit and 35 cents a share. Genting Malaysia was the most actively traded counter on Bursa Malaysia, with 68.65 million shares changing hands within the first 15 minutes of trade. Among other actives, Top Glove slipped 1 cent to 69.5 cents, SCIB advanced 1.5 cents to 25 cents, and Tanco gained half a cent to 85.5 cents. Moving on to local currency updates. The ringgit opened higher against the US dollar on improved local market sentiment, supported by positive remarks from Bank Negara Malaysia and expectations of a shift in US Federal Reserve policy. At 8 a.m., the ringgit was quoted at 4.2220 or 4.2315 against the greenback, strengthening slightly from 4.2265 or 4.2295 at yesterday's close. An analyst said market sentiment improved following comments on BNM Governor Datuk Seri Abdul Rashid Ghafur, who noted that the ringgit has the potential to appreciate to 4 ringgit against the greenback by year end. Meanwhile, Bank Muamalat Malaysia Berhad Chief Economist Dr. Muhammad Azanizam Abdul Rashid said that while the US dollar index DXY continues to rise amid the ongoing US government shutdown, the trend may not be sustainable. He said the Philadelphia Federal Reserve President Anna Paulson, during a gathering of the National Association of Business Economics, hinted that interest rates should be lowered towards a more neutral level as the inflationary impact from tariffs appears manageable. Muhammad Azanizam said that, as such, the rise in DXY seems unsustainable. Should the US government shutdown be resolved, DXY could experience a correction. For now, it remains dollar positive, hence expect the US dollar and ringgit pair is expected to hover around 4 ringgit and 22 cents today. Meanwhile, the ringgit strengthened against a basket of major currencies. It rose against euro to 4.8832 or 4.8942, firmed versus the Japanese yen to 2.7694 or 2.7758, and improved against the British pound to 5.6292 or 5.6419. Against ASEAN currencies, the ringgit also traded higher. It appreciated versus the Thai baht to 12.9517 or 12.9888, advanced against Singapore dollar to 3.2507 or 3.2588, gained versus the Philippine peso to 7.25 or 7.26, and strengthened against the Indonesian rupiah to 254.7 or 255.4. Continuing with some local economic updates. The ringgit may strengthen to below 4,000 against US dollar next year if the US economy continues to weaken while Malaysia maintains its current domestic growth momentum. Economists believe the target is achievable, though challenging given existing domestic and global conditions, and would require effective policy implementation by the government. IPPFA Senior Berhad Director of Investment Strategy and Country Economist Muhammad Siddiq Jantan said the ringgit is currently trading around 4.2200 against the greenback, having appreciated by about 5.5% so far this year, supported by improved fiscal discipline, renewed foreign inflows and steady current account surpluses. He noted that for the ringgit to strengthen below 4.000 versus the US dollar, it would require an additional 5.2% appreciation over the next year, a move that historically coincides with broad-based US dollar weakness and stronger global risk appetite. Now, Finance Minister Second Dato Sri Amir Hamzah Azizan had earlier stated that the ringgit may strengthen to just below 4.000 versus the dollar within the next 12 months, citing Malaysia's strong economic fundamentals. Siddiq said this optimism reflects confidence in Malaysia's macroeconomic resilience, but cautioned that achieving such a level would not be easy amid the current environment. He added that Malaysia's fundamentals remain supportive, with the export sector showing resilience, the fiscal deficit narrowing and foreign reserves covering more than 6 months of retained imports. However, he stressed that further gains will depend on sustained domestic growth momentum, effective policy execution, and a shift in global monetary conditions. Straight View Capital Fund manager Neo Jiaman echoed a similar view, saying it is possible for the ringgit to reach below 4.000 if the US economy continues to weaken, particularly given recent soft employment and housing data that may prompt the Federal Reserve to implement further rate cuts. He said Malaysia's commitment to fiscal consolidation and resilient macroeconomic fundamentals should help support the currency. However, Neo warned that a potential depreciation of the yuan could weigh on the ringgit's performance due to Malaysia's close trade and investment links with China. The high correlation between the two currencies means the yuan's weakness often translates into downward pressure on the ringgit. Both economists also highlighted external risks that could limit the ringgit's upward momentum. These include persistent US dollar strength driven by prolonged Fed tightness, weaker growth in major trading partners such as China and the Eurozone, and ongoing geopolitical and trade tensions. Moving on to corporate news update. AirAsia ex-Berhad Chief Executive Officer Benyamin Ismail has echoed Malaysia Aviation Group MAG Managing Director Dato' Captain Izam Ismail call for original equipment manufacturers, OEMs, to pull their socks as airlines continue to struggle with ongoing maintenance, repair and overhaul MRO bottlenecks. Benjamin said AirAsia X like many other carriers, have been affected by prolonged supply chain disruptions and engine servicing delays, which have left 3 of its Airbus A330 aircraft grounded due to Trent 700 engine issues. He emphasized that the airline has been in constant communication with the OEMs to ensure accountability, saying he repeatedly reminds them to pull their socks up to deliver on promises. Izam had previously urged aircraft manufacturers to urgently resolve the persistent supply chain disruptions that have impacted the global aviation industry since the pandemic, warning that a recovery would require a long runway before operations could stabilize. MAG has been experiencing extended turnaround times for engine overhauls and component repairs, often beyond contractual timelines, a problem Benjamin confirmed is equally affecting AirAsia X. Benjamin said 2 of the grounded wide-body aircraft are expected to return to service within the next 2 to 3 months, while the 3rd aircraft is targeted to rejoin the fleet by January 2026. Now, despite these setbacks, he stressed that AirAsia's X network plans remain unaffected, including new routes to Tashkent and Istanbul, which are scheduled to commence in October and November this year, respectively. The airline currently operates 16 aircraft out of a total fleet of 19 and is actively sourcing used aircraft to support capacity expansion. Beyond engines, Benjamin said supply chain disruptions have also affected other components such as seat production and spare parts, with delivery times still stretching up to 18 months. He noted that while the airline's MRO costs have not significantly increased, the main issues lie in scheduling and operational planning rather than expenditure. He also called on policymakers to accelerate the development of a free trade zone for MRO activities at Kuala Lumpur International Airport (KLIA), as outlined in the Malaysia Aerospace Industry Blueprint 2030. He said countries such as Indonesia, Thailand and the Philippines already have similar zones that offer cost advantages through tax incentives and faster customs clearances. Benjamin said it's time for Malaysia to move fast on this, adding that such initiatives are essential to maintaining Malaysia's competitiveness in the regional aviation sector. And finally, wrapping up, we have major corporate developments and deals across Malaysia. Genting Berhad has launched a conditional voluntary takeover offer to privatize Genting Malaysia Berhad by acquiring the remaining 50.64% stake it does not own for RM2.35 per share, valuing the deal at 6.74 billion ringgit. Rohas Teknik Berhad, through its 86.80% owned unit HG Power Transmission Center Berhad, has secured a 28.67 million ringgit contract from Tenaga Nasional Berhad for 275 kV bulk supply works at a data center in Iskandar Puteri, Johor. High-Tech Padu Berhad's contract for the National Integrated Immigration System project has been revised upward to 1.05 billion ringgit from 892.19 million ringgit. Omesti Berhad, via its 49% owned subsidiary Formis Network Services Sdn Berhad, has secured a 30.31 million ringgit contract from the Ministry of Home Affairs. Malakoff Corporation Berhad has signed a reservation agreement with Mitsubishi Power Ltd to secure 2 M701 Jack gas turbines and generators for a planned 1,400 megawatt gas-fired power plant in southern Peninsula Malaysia. Now that's a wrap for Morning Bell Updates with me, Anujaria, on KleverStock. Thank you for choosing us, investors. Stay tuned for the next live coming soon.